Everyone, welcome back to the channel. It's Demetrius, and today I want to walk you through a story of a woman that I personally had the opportunity to work with along with her husband, and we'll call her Sarah for the sake of today's video. And ultimately, up until some recent business changes in her life, she'd built a really successful career. And she's also very serious though about creating cash flow even outside of her career because she's a big proponent of owning businesses and creating cash flow from that. And so even though she was doing all of the right things, right, from a traditional standpoint, she was doing all of the right things financially. She was maxing out her 401k. She was earning incredible money from her W-2 job. She started to really feel stuck because she wasn't able to scratch this entrepreneurial itch that's been nagging at her for a very, very long time. And not to mention her dollars within that 401k, they were growing, like absolutely, which is great, but she couldn't use them or have any meaningful control over them, over those dollars that were in the 401k. And so through a few connections, she got introduced to our team. And I want to keep the story going from here. Just to give you a little bit of background about Sarah, she was earning $400,000 a year at 45 years old. She's a successful business leader, very smart, very sharp mind when it comes to just even spotting opportunities. And like many people who earn a high level of income like her, she contributed pretty heavily to her 401k to the point where she was sitting on over $1 million inside of the 401k alone. And so the catch there was that she couldn't like utilize any of the money without impacting the growth of that money in some way, shape, or form. And so her company didn't allow her to do any in-service withdrawals, right? Basically taking a withdrawal while you're still working there, which by the way was another huge sticking point for her because of how much she values this idea and the reality of control. She was even willing to take the 10% penalty, but the rules just didn't allow for her to do that. And so technically she could have taken a 401k loan, just so you know. But most plans in the 401k world allow you to borrow up to about $50,000 or half of the balance, kind of whichever is less in that scenario. And that actually is an IRS rule, believe it or not. And that really just wasn't enough for what she was looking to pursue and the business that she was looking to buy. Plus, like here's the part that most people don't really think about, I think. When you borrow from your 401k, that money does have to be pulled out of your investments and placed in a low yield side account. So even though she would have been paying herself back and potentially even paying herself back with interest, she would have been missing out on the growth that those dollars could have earned her if they would have stayed fully invested, right? And so if you watch my last video about uninterrupted compounding, you know how important the loss of growth can be over time. And so borrowing from your 401k, what that does is it interrupts that compounding. Well, that's, again, go watch the other video. I think you'll find it helpful if that interests you. But anyways, on top of all that, you're going to be locked into a repayment schedule as well if you take that traditional borrowing against borrowing from the 401k. Like, and if you miss a payment, you leave the job early, that loan could turn into a taxable distribution with penalties. And so there's just a lot of drawbacks to that. And so yeah, she could have tapped into her 401k, but it would have come at a cost for her. And so in her mind, it just really started to add more friction to an already very clunky situation anyway. So here's what she and her husband ended up doing, right? Here's how life insurance kind of fit into all of this. Both of them ended up putting $100,000 into their own overfunded whole life insurance policy. So that's $200,000 in total, right? Both of these policies were designed exactly the same way to specifically maximize cash value growth within the policy, right? Especially early on in the policy too. And so moving forward, they actually contribute $24,000 per year going forward. So both policies structured for high liquidity, over 90% in the first year. And between the two of them, they had about $182,000 or so that they could borrow against pretty much immediately. And this is because they found a business opportunity, right? They were searching for business opportunity. They could spot them pretty well, and they found a business opportunity. They identified a business that they believed that they could improve pretty significantly based on their experiences and the inefficiencies within the business that they saw, okay? And so instead of draining savings or jumping through hoops to get a loan from the 401k, they ended up just borrowing against their life insurance policies. So what this means for them is that all of the money in the policies stay in the policies. That's compounding uninterrupted. They access capital very, very quickly without credit checks, without delays from the banks and all that. And they put that capital to work in a business that they control, which is what they want to do all along. And so if you're watching this and you're thinking to yourself, okay, this sounds kind of interesting, but how does it actually work? I've actually put together a free PDF that literally breaks it all down for you. That breaks it all down for you. Everything from what the strategy is, from what the strategy is not, to how it's structured, how to use it, how it stacks up against other financial tools. And it's a super digestible read. I highly recommend it. It's very straight to the point. It's not having a whole lot of hype in it or any hype whatsoever. And it'll help you really better understand if this strategy is a fit for you. It helps you really to self-soothe and determine for yourself, is this something that I want to look into further and spend more time with? So if you want a deeper dive, you can grab that free guide by using the link in the description below. Now, looping back to my clients, right? They're long-term thinkers, right? They care less about the potential possibility of a high rate of return long-term in the future, right? They value way more predictability and the certainty that they will not lose money, which is, all boils down to Warren Buffett's first couple of rules of investing. Like, don't lose money, okay? And so a quick rundown of the numbers, and admittedly, this is very simplified, so don't come at me in the comments. But if Sarah left her $1 million in the 401k, growing at a very steady 7% rate of return over the next 10 years, right? And she maxed it out every single year as well, she'd have somewhere in the neighborhood of $2.3-ish million by the end of that time frame. If you're using the 4% rule, which is very somewhat common within the traditional retirement planning, distribution planning, future cash flow planning arena, that gives her somewhere in the neighborhood of $92,000. Even you can even round up all the way to $100,000 per year in income from ages 55 to 85. That's around when she wanted to retire anyway. But instead, by using life insurance to access capital and to acquire this business, she'd already be producing a meaningful amount of cash flow and should be doing so right now, right? If that business pays her even just $10,000 a month, that's $120,000 a year. Again, starting right now, not 10 years from now. Not to mention the growth that would have probably happened within the business, where she's probably paying herself a little bit more so every single year along the way. So she's not just protecting her future, she's literally pretty much accelerating her future. And I think there's a lot of power in it. Now, one of the things I want to say too is that when it comes to borrowing against your policy, it's not necessarily free, right? In her case, the loan rate was around 7%. At other carriers, the rate can be around 5% or so, and that's of the recording of this video in July of 2025. But she compared that to a business loan at maybe 8% or more with monthly payment obligations, a hard money loan at 10%, 15%, maybe a little bit more so, and they have very rigid terms, or just kind of missing the opportunity altogether. And so with the policy, there's no approval process, there's no forced repayment schedule, there's no unnecessary stress if the business takes a little bit of time to ramp up. It's her money on her terms. It's literally her private line of credit that she can access whenever and for whatever she wants to. And in her case, it so happened to be business. So utilizing your cash value as a private line of credit, like borrowing against your cash value, is one of the most powerful benefits of properly structured, overfunded whole life insurance. It's not just about what those dollars earn, it's about what they can unlock for you. It's more about what it does up here for you, knowing there's more things that you can produce outside of that, right? Sarah didn't buy a policy primarily to just someday die with a big death benefit, although she does like that idea. She has kiddos. She bought it to live with more freedom, to build something meaningful right now without interrupting long-term growth, right? She didn't want to choose between, okay, do I invest in my business or do I save for the future? She didn't want to have to choose between the two. And so she's literally able to do both. Okay. So if you're someone and you're in a position where you want access, you want flexibility, control matters to you more than just the raw rate of return on a piece of paper, what could you build if more of your money was always within reach? Okay. So if you want to learn more about the uninterrupted compounding side of whole life insurance, go ahead and click the video on the left. And if you want to see a more so high-level overview about all of the core benefits and core reasons why clients that I've worked with have parked some of their money in whole life insurance, go ahead and click the video on the right. Thanks for watching.